Okay, so we are recording, and today is September the 16th. Actually, happens to be my mom and dad's wedding anniversary. I'm not sure which one it would be because they're both passed away, but it would be somewhere in the neighborhood of 50, I guess. Maybe 60. A long time ago. Okay, so today is September the 16th, and this is live training, session number 1. The good news about session number 1 is it should take less than an hour and 15 minutes. We should finish in about an hour or so. And there'll be a little time for questions. There'll be plenty of time for questions at the end if you have any. So let's go ahead and get started. Some of the others, like Jimmy's bands, tend to take a little longer than an hour and 15 minutes, but we try to keep it around an hour and 15 minutes if we can. So let's share my desktop. Monitor number 2. All right, that's good. And slideshow from the beginning. And that looks like pretty good to me. So, okay, we're ready to go. First, a disclaimer. Basically, with the disclaimer, I don't want to scare everybody away, but there really is a substantial risk of losing money in trading anything, Forex, among that list. There's no guarantee you're not going to lose. No matter what kind of a magic formula you had from the past, it doesn't necessarily mean it's going to work in the future because markets change. So you should not be trading any money you can't afford to lose. Certainly you don't want to be betting the rent money on this stuff. It's not suitable for everyone. You need to have a clear investment objective. I really recommend some of you, no matter what I tell you, are going to have these crazy ideas about all the money you can make from Forex trading as if it's some kind of a gold mine. And so I say run it by a friend, even if they don't know anything about markets or anything, or run it by a professional in some form, some other business. And, just tell them what you're looking to do. Let him run your numbers, because for many of you, you're coming up with these ideas where when you run the numbers, you're trying to make 5,000% in a year or something totally ridiculous like that. And that's where your problem lies, and not being realistic. Right away we need to slap ourselves in the face and say, let's get realistic here in terms of what we can and cannot do, especially if you're new at this and you have no idea what you're doing. Try and tone down your expectations to something realistic. Lastly, you should be thinking about your level of experience. I don't think any of you should be betting very much, just a little tiny bit of real money until you get the hang of this. And frankly, a lot of you never will. Some of you will. Most of you won't. But when you do get a hang of it, well then, once you have it, that's when you want to start making significant bets. You can't bet your way to success in trading. You have to learn how to trade, and you have to come up with a method based upon the hours, the time you're available to do it, the amount of effort you want to make, that actually consistently works and makes money. Consistently meaning over a period of weeks to months, start to make money, not every day. It doesn't work that way. It's not meant to be that kind of a market. No trading market is like that. Now here's your training checklist. And again, I don't want to be your conscience, but this is what you need to have done already before you came here even today. You should have, either you have a good basic understanding of trading and Forex, or you don't. If you don't, you should have already done the basic training exercises on technicals, fundamentals, psychology, money management, etc. You should have done all these basic training videos, so you have some clue of what you're doing. The online training videos, there's the same 5 we're going to be doing this week. That's Monday, Tuesday, Wednesday, Thursday, and Saturday. That same group of 5, we did them last month and the month before that, and the month before that, and the month before that. So there's plenty of copies, if you will, of pretty much exactly the same presentation I'm going to make today. I don't make it the exact same way. I don't run a dog and pony show or whatever they would call it. I try to vary it, and and it's always a little bit different, but the information is essentially the same. So before you attend each of these 5 webinars, especially number 3 and number 5, the Jimmy's bands, and actually for that matter, 3, 4, and 5, maybe even 2, 3, 4, and 5, have gone over at least one trading video already. One of the recordings of each session before you come here, so that you have some idea of what it is I'm talking about, as opposed to trying to internalize all of it for the first time. I do see some of you have been here 5 times before. Some of you have already been to Guernsey. You have plenty of experience behind you, and that's good. You know, it's the fact I do this live every month is meant for that purpose exactly, so that as you mature and become more and more of a trader, you can come back to these beginning ones, listen live, ask your questions, and be growing all the time, and it starts having more and more meaning as you understand more and more of what it is you're doing. The daily trade find every day is a must. It's only 5 to 10 minutes long. I know a lot of students already have gotten into the bad habit of zipping through the PowerPoint to the slide that says market view, trade view, what's the hot tip for today, and that's it. Again, there really are no shortcuts to success at trading. You'll get good at trading if you learn how to trade, and if you don't learn how to trade, you won't get good at it. And a big part of the process of learning how to trade is to listen to the Trade Finder every day. Let me express my view of the market, why I have that view, and discuss how it worked out and whether or not exactly how I saw the day going. You know, and I don't try to fool anybody with exact, I know everything, you know nothing, and all that. I just kind of like to go through every single day and say, gee, you know, this is the way the day worked out, and you know, this is where the trades were doing good, and you know, if a news item hits or for some other reason the trade goes bad, just to point out, well, look, this is doing pretty good, but then news came out, which is no way the system knows about that, or me knowing about that, or you knowing about that if you were not at the desk. So that's why the trade went bad. For purposes of for the people who actually sit there and trade it every day, who can actually take advantage of reevaluating and redeciding on their trades consistently throughout the day. In other words, really watching their business. Kind of the difference between owning a business and being there 10 hours a day, growing and learning with your business, and being an absentee owner who has a manager he emails every week or two to find out how things are going. Well, go down the road a year or two and figure out whose business is probably doing better. The News Trader Excel spreadsheet weekly, I think most of you don't even bother to look at that, and you should be, because that really is the key to it. That's where the longer-term views of the market come in. This is where you could be putting on, I think today would be a beautiful example of it. You know, all last week, the week before, what were we talking about most days? Selling the dollar, selling the dollar, selling the dollar, selling the dollar. And Sunday we got some news out, and the dollar opened significantly lower today. Well, for the people who are very hip to the fundamentals, who've been listening to why we're saying what we're saying, when we're saying it, et cetera, you know, perhaps they already had a little bit of a trade on. So when they come in this morning, they're looking at a real nice profit, as opposed to, well, what am I going to do now? The dollar's already way down on the day. It's probably going to go lower, so what am I going to do now? You know, so the news trader, to a great extent, can get you thinking about the bigger picture of individual currencies, perhaps putting together two individual currencies, you know, to accomplish what many of you are trying to accomplish, which is to trade for a few minutes a day and be successful at it. To a great extent, that is a fundamental function as much as a technical function. When you decide you're going to leave out the the fundamental function, you're going to leave out some feel for what's driving the markets, what the positions in the markets may be. When you leave everything else out except for one little technical thing, I think that's why if you're failing, because you're simply not doing the job properly. You know, and that would be true of anybody in any business. You know, you want to be a professional athlete, and you don't want to go out and practice. Well, when it comes to play the real game, you're probably going to lose because you're not going to be conditioned enough. You're not going to be as ready as you need to be. So if you are having a tough time, and I know a lot of people are, a lot of people are not, you got to really be honest with yourself and figure out, you know, are you doing enough? You know, are you really doing enough? Now, as far as the trading goes, you know, every week I do a live trading session, and those videos, the last 2 years, so about 100 of them, are up on the on the members forum, along with probably 50 live training sessions. So you may want to, if you can, take a look at some of them. If you're allowed to, if your part of your program allows you to come to the online trading sessions, you know, they're always a good thing. But perhaps to, you know, it's once a week. Once again, it's a matter of discipline. You know, what are we really talking about here, guys? We're talking about each month 10 75-minute sessions that would cover all the training and all the live trading at a max. Probably it would be maybe only 9 sessions. 5 to 10 minutes per day, 20 days. That's a few hours a month for Trade Finder. You know, that's kind of the minimum you should be doing. If you're doing a lot less than that, and I don't consider, you know, staring at charts for 6 hours straight doing anything unless you actually have some kind of a thought process that makes sense in looking at those charts. Just staring at charts for the sake of staring at charts, or randomly reading things on the internet, you know, there's no focus there. There's no reason to think that's going to really improve you very quickly. Some of you, most of you, are going to take advantage of coming to Guernsey if you're allowed to, the 3-day program. If you're not, that's something you may want to consider getting signed up for. You know, it's totally up to you. We're having one in October, just so you know. And what else we got? The forums, the emails, the phone support. You know, some people do call me. Some people they make an email to me and ask to speak to me, and I get right back to them and we talk, and you know, I try to help them with their whatever outstanding issues they have. Certainly, email is not a problem at all. So do take advantage of it when you have questions and all. Remember, it is part of the program you purchase, and you should use it. Now, if you're a beginner trader, I think you want to focus on trading real money, very tiny, tiny amounts. You have to get one of those kind of accounts where your bets can be really tiny. But there is something about making real bets that makes it a lot different than fake bets. And the example you all heard me say at the seminar, if somebody lost 5,000 real pounds on the trade, or somebody lost 5,000 demo or fake pounds on a trade, who's more likely to give me a call and ask me what went wrong with the trade? Who's more likely to make an effort to figure it out? The person who lost 5,000 real pounds, or the person who lost 5,000 fake pounds? That's an extreme example, but even if you lost 10 or 20 or 30 real pounds, you'd be a little pissed off, and you'd be a little more interested in trying to figure out what the hell went wrong, rather than be stuck in that demo land where it really doesn't matter. You should be working on your daily limit. You should be thinking about how that's going to work. And a daily limit in terms of losses should also be construed as a daily limit in terms of profits. Again, trying to get realistic in what you're doing is going to make a huge, huge difference in whether or not you're successful or not. You know, if you had this idea that your daily limit's going to be 100 pounds, and you're hoping to make an average of 200 pounds a day over the course of the year, you're just really way out there in terms of being out of sync with reality. It's very important to get as real as possible and be thinking in terms of making a realistic amount of money. What's realistic? Go on the internet, look up hedge funds, look up look up pension funds, look up top traders, and look at the kind of returns they make. And just make sure you're not looking at some bullshit website where somebody's talking total shit. Make sure it's something credible. You want to focus on quality trades, and just what that means is just a few trades. So when you're looking for quality, you bypass a lot of mediocre or just okay or downright I don't know kind of trades, and just focus on the really good ones. And this is hard to do because for many of us, we've had jobs where we work by the hour, and when you work by the hour, you expect if you work for an hour, you'll get paid. And so you tend to think as long as you have a trade on, you have a chance of making money, which is true, but you probably have an equal or even greater chance of losing money from the point of view if you don't really have a strong case for having that trade on to begin with, you probably shouldn't have it on. My own personal preference is to just do a few trades, but to do quality trades, and when I'm going to do something, to make a decent-sized bet to make it worth my time. I pretty much don't go into any trade without thinking it's a winner. And if I do have a situation where I'm going to go into a trade where I think it's going to be a loser, it's because it has a very unique risk-to-reward ratio for a really valid reason. A valid reason is not simply multiplying 5 times the amount you're risking to come up with a profit target. That's a dream. That's a hope. And remember, if you had hope in one hand and if you had skills in the other, and your life depended on it, which one would you access? The hope or the skills? You should have a view. There's nothing wrong with your view being I don't know, because right away that tells you if you have a view and it's I don't know, you should be making small bets because you don't know, or not betting at all. When you have a strong view, you should be thinking I should be making a decent-sized bet if my trade opportunity comes up. And expressing your view is what makes you a trader. Anybody can talk about it. It's doing it. That's the hard part, getting in there and putting real money in the line. And that's probably the hardest part of trading, is to believe in yourself. If possible, or not even if possible, everybody, no matter if you've been trading for 100 years, you should do a weekend critique of how you're doing every week. And that doesn't mean beating yourself up. What that means is simply going through the trades you did and going through this little checklist to see, was it a truly quality trade at the time? How many trades did I do? Did I stick within my limits? Did I really make a real bet to express my views? Critique what you're doing. To a great extent, if you're a beginner, what's most important is staying within your daily limit, actually making a real bet, and making sure at the time you believe you have a quality trade, and after listening to Trade Finder, you still think you had a quality trade. If you didn't, okay, you learned from that. If you don't do that step of learning from your mistakes, then there's no way of getting better. So you have to go through the step, not at the time you make the mistake, or not at the time you have a losing trade, because you're not in the right mindset. You need to have a set time you set aside on the weekend, or a set day on the weekend that you set aside just 30 minutes of your time where you're going to review what you did or didn't do. And that may mean going through the PowerPoint slides again, just the PowerPoints, not the recordings, looking at the different things and saying, yeah, I should have done that one on Tuesday. Yeah, I shouldn't have done that one on Thursday. That kind of a thing. And remember, I'm not a Bible of trading by a long shot. I'm just someone that can help you, but I don't have all the answers, that's for sure. I'm not saying what's in the Trade Finders 100% correct. It's as accurate as I can try to make it. I don't try to fool you with Trade Finder. I try to be as real as possible. So try to use it more as a tool. Now, in terms of the trading day, I think a fair question for many of you is, well, where do I get started? And since we consider 10 p.m. London time, 5 p.m. Eastern time to be the start of day, well, that's where we get started. And there's a lot of things that we can do right at 5 o'clock. It's 30 minutes from the time here. Right now it's 9:25 p.m. in London. It's 4:25 p.m. here on the East Coast of the U.S. And we're getting near the end of the day. So in just about a half an hour's time, we can start to see how our daily candles look. We can see what news came into account. Now we had last on Sunday, we had Syria this past Saturday, Sunday, and an agreement being reached, which should cause the yen and the dollar to weaken. Then on top of that today, we had Larry Summers say he's out of the race to replace Bernanke, and we're left with what's her name? Yellen. Janet Yellen, who happens to be somebody who's very similar to Bernanke, who wants to just go slow and who believes in taking everything really slow. So the stock markets right away would say, oh great, they're not gonna take away that QE too fast. That's got to be really good for stocks. And from the other point of view, it's going to be a lot further before we get rid of QE if Janet Yellen takes over. At least this is what the market's thinking. So under those conditions, the dollar go lower on that as well. So we had two things influence the dollar going lower today. Now, my view last night was, okay, so I know we got this news over the weekend which should push the dollar lower, and I know I've been bearish on the dollar for quite a number of days in a row, so this is perfectly in my view. But now the dilemma is, by the time we're able to deal, it's going to be the prices. See, what you have to remember is when you're looking at 5 p.m. Eastern, 10 p.m. London time, Sunday, the market's already been open for 3 hours or 4 hours at the bank level. The market starts trading, so the dollar's going to be significantly lower in all likelihood. So any opportunity to take advantage of today's, if you will, which would be Monday, today's dollar weakness related to that news is already going to be already probably achieved. So the price of the dollar is going to be significantly lower against everybody, and it's going to be significantly higher versus the yen, because the yen's going to weaken the most, and the dollar's going to weaken the second most. That's just the way the formula seems to work. That's the way it's been for weeks and months now. I actually got an email from somebody and says, well, why is it that way? And I said, well, I don't know why it is that way. I can just tell you it is that way. And for trading, it's good if you know the why, but if you don't know the why, but you know the is, it's still okay. Because if I don't know the is, that means probably very few people have a strong opinion of what the is, if that makes sense to you. So we're going to be able to see at any point how the news is impacting. And as I said last night when I looked at this, I actually looked at it on Saturday night because the Syria news was already out Saturday night, and I was going to my brother-in-law's running for Senate for the state of Pennsylvania, so he had one of those meetings, like 1,000 people there, and my wife and I were invited, so we went yesterday. So I told you guys, here's the trade plan for Saturday night, and Sunday night the dollar's going to open a lot lower, and then from there, we have to take it for what it is. And I got an email from somebody and said, well, does this change European breakout? I said, yeah, it completely throws it off the map. It's not going to be possible because if you look at your pound dollar and your euro dollar, and we're talking about 50, 60, 70 point room to go numbers, more like 60, 70 points room to go numbers. Well, then if those currencies are going to be that much higher right at the opening, there's going to be no room to go up. And so you're not going to have any buy trade from European breakout, for example. I do apologize if you don't know what European breakout is. I just realized this is session 1, and there may be 2 or 3 people in the room here who haven't done European breakout yet. But looking at the list here, I see that everybody else has. So just using as an example. Tomorrow, after tomorrow, you'll understand what I'm saying today if you're one of those 2 or 3 people in the room who don't understand European breakout. So we're already going to be too far up in euro dollar and pound dollar, the 2 pair we trade for European breakout. And if those pairs were to go down, well, by the time they got all the way down overnight and we got a chance to sell a European breakout, there wouldn't be room to go down either, because after it went up, the stop loss would be so far away that the profit target wouldn't fit on the downside either. So the short answer is there will be no European breakout on Monday. We'll be focusing on Jimmy's bands, for example. And from that point of view, and again, I'm sorry if I'm talking systems that a couple of you don't know yet. You will know these in a couple of days. And as I say, I don't repeat the same thing every month. Otherwise, I would just throw it on a recording and I wouldn't do this. So I'm kind of doing this for the benefit of looking through the room here, a lot of you more experienced people. The Jimmy's bands is because it's made a very strong move up, it's only going to be possibly giving a sell signal. And that could be okay, because considering on Wednesday we have the FOMC meeting, and we don't know what they're going to do there, it could be that people get nervous about the lower dollar, and we could get a move back up for the dollar today being Monday. It's possible. But along the way, it's possible you could have put on a sell trade, for example, for Jimmy's band, and then the news about Yellen being the next and Summers out of the picture, that would easily push the dollar back down again. And this is just the reality of trading, is that you don't know what's going to happen in the future. What you do know, what you should know, is if you're sitting there trading it, you should be aware when a headline comes out that Summers is out of the race and you start to see the dollar falling, that is a significant thing. And if you are in a trade in the other direction, it would make sense to get out. Or if you're not in a trade, it would make sense to jump in and see what happens. And again, that's probably the thing that most of you don't get, that bank traders get 100%. Because you can imagine, I'm going to sit there every day for 10 hours doing this for 20 years. And even after doing it for even 6 months, you kind of get the idea that when you're sitting there and all of a sudden some kind of news happens and it's going to directly impact the market, there's nothing better to jump on for a trade than something where you're almost 100% sure it's going to cause at least some kind of a movement. Now, where many of you go wrong is you want a written guarantee of where it's going to be in the next 18 hours. And from that point of view, I think you're way missing the whole reality of it. The reality of it is, at that point in time, for the next few minutes, it's going to move in that direction. And if you jump into a trade, you get some profit in it, you can quickly move your stop to break even. And then if it does go back in the other direction unexpectedly, or it just starts to fade, whatever it is, the worst case is you don't lose anything. And if it just keeps going and can, because of this additional news, can do more, say, for example, than the normal room to go, well, now you're in a case where you could be expecting it to do more than normal. So having that trade on would make sense. So you kind of start off with, on a given day, a set rule. And what you're trying to do is to say, well, that rule works on average. Is today average or not? And again, this is, for most of you, many of you, you just don't want to go there. It's like, well, this is way too much work for me. I just want some kind of magic formula to do a couple of trades here and there. I don't want to have to think. But I'm just trying to give, to some of you in the room here I know who do it full time, just give you some thoughts about what you should be thinking about. You know, I could just run through this and say, okay, beginning of the day, you should think about you should look at the charts. If you got a candlestick chart system trade, you know, if you look at the news, you may want to put on a started day trade, or if you look at the charts, just throw a trade on, here's your stop. You know, that's okay too. You know, that's okay. But when you want to leave out the fundamentals and you want to leave out thinking about it, you are leaving out 2/3 of the picture, and you should think about whether that makes sense to do, even though you may not like it. And think about, I'm into exercise. For the last 4 years, I've been very much into exercising, and I do it almost every day, probably every day, and sometimes twice a day. I'm really getting ridiculously hooked on it, but the point is, when I'm doing, say, a certain workout, like on a bicycle, and the instructor is like, okay, just we got 5 more minutes, really dig in, turn up the what's called the intensity of it by making it harder to do. I know the more I put in, the more I'm going to get out. But it's a matter of, can I convince myself to go there at that point in time? It's very easy to make an excuse and say, well, I've already burned so many calories, and I'm going to be here tomorrow, so I don't have to do this. But getting in that mindset as if there was no tomorrow, there only is today, that kind of a mindset, well then, that's where you start really getting good at anything. So when you're trading, if it's like as if every day was very intense and you had to make the money today, but you can't take chances trading shit because you may lose money. But you got to make sure that if there is something there that's reasonable, you don't miss it. From that point of view, telling me you're going to leave out the news and the fundamentals, you're going to leave out what you think the positions are, you're going to not want to think about other things going on in the market, the fact that some news comes out that totally changed the picture, that you don't want to be bothered with that part. Again, it reminds me of being on the bike and saying, well, you know what, I'm going to be here tomorrow. I think I'll just stay at this level. I'm not going to turn up that intensity. And again, what I wind up with is less of a workout. And I think in trading, it's almost the same thing, in that you wind up with less of a result. All right, let me move on. Volatility. Volatility, again, volatility is just what we talked about a minute ago, 5 minutes ago, when we were talking about the fact the dollar was going to open a lot lower on Sunday because of Syria. And for that reason, our normal volatility numbers were going to be used up in the direction of a lower dollar. So the dollar's going to achieve a normal day's move lower, probably by the time most of you would even turn your computers on, and possibly, likely, as soon as 10 p.m. comes and you turn on your computer on Sunday, it will have used up just about all of its daily movement. Now, I'll look at this exactly tonight when I do Trade Finder and kind of show you in steps what we're talking about right here. And then we have the Forex Climate. You can look at Forex Climate and you can get a feel. I like the 1 hour time frame of each currency one at a time. Is something clearly moving from below zero to above zero, and is something clearly moving from above to below. You can look at different situations. Now, what some people try to do, which is a kind of a good idea, but at the same time it may be looking for too much, is they try and look for that perfect scenario where everything is matching up without regard of how it got there. See, how it got there will explain to a great extent whether or not what you're seeing is really relevant. The how it got there, a lot of times, is just as important as the fact that it is in a particular place. Sometimes it may look a certain way, but you can piece together how it got there, and you can say, well, it really ain't what it appears to be. A very simple example would be getting a signal from a momentum system from the price pushing outside whatever boundaries, whether it was a line, a horizontal line, or more of a moving average type line, but the price pushing above or below, giving you a signal to go with it, or even a signal to go against it if you were trading some kind of retracement deal. it depends on what caused it. So if you get a Jimmy's Band buy signal in pound dollar caused by a news event that we had a view on, would probably reverse if it did make a move. Well, that move gives you a signal, and if you take that signal, you're actually doing just the opposite of what our view was, because our view was it would go up and come back down. So the fact it went back up, it went up in the first place is because of a news event, and we're thinking it's going to come back down again. So you see how you'd be doing a buy trade when you probably should be doing a sell trade. And the fact you're getting a signal from a technical system, it's the why that signal is occurring, and it's probably going to be one of the ones that fail. So the fact that if you are a total trader as opposed to a piecemeal trader, just looking at one thing, you can come to much better conclusions. Not all the time. Sometimes you'll actually talk yourself out of a good trade, but I'm thinking 2 out of 3 times it'll work to your favor. So, and a third of the time it'll be a mistake to have done it. But again, if 2 out of 3 is helping and only 1 is hurting, then you're getting an advantage on the market. And this is all I teach. This is all I attempt to do, is to get it right 6 out of 10, 6.5 out of 10, and if you get 6 out of 10, 4 of them are winners and 4 of them are losers. So I'm saying 8 out of 10 trades we do are going to be a 0 result between those 8, and the other 2 represent our profit. That's the way I look at it, and that's what all of you were told before you came here today. That I'm looking to get it right 6 out of 10, and I'm trying to pick trades I believe will win 100% of the time, so that I get an advantage of trying to pick only winners and thinking I only pick winners, but I can still get it wrong 4 out of 10. And my system, my method, my trading plan will make money under those conditions. It won't be a lot of money. So that's the thing, you have to remember, we talked about, is that don't be expecting to take home the ranch, I don't play tricks like, well, I have one trader that made 10,000% on his money, so you should be making 10,000%, with a little writing underneath saying, that guy was a total fluke. That'll never happen for you. I don't play those games with you, because I know a lot of you are very serious about this, and I appreciate that. So I try to be as serious with you as possible, as realistic as possible with you as well. So this would be the start of the day now. What kind of trades, in terms of finding trades, some of us need that overall view of it. Well, you can have a view trade. What a view trade simply means is, I looked at the charts, I think the dollar's going down. I looked at the charts further, and I really like the way the pound-dollar pair is looking in terms of the dollar going down. I like the pound-dollar pair specifically to go up. Okay, so you have a view trade. So what you can do right at the start of the day is you can do a start of day trade. That's one of the systems we'll learn in session number 4. And put on your view trade. That's one way. A retracement trade means the price has been going down and you're looking for an opportunity to buy it because you think in the bigger scheme of things it's going to go back up. Or the price has been going up and you're looking for a trade to bet on it going down because you believe the price is going to go back down. Retracement trades happen a lot in a trend because the trend gets a little tired, so it goes the other way of the trend, what's called counter trend. If it's been going up, it goes down for a little while, and then it continues up. So it needs to kind of take a breather along the way. Kind of like the waves in the ocean. They keep coming forward, but they go up and down. And you have an undertow that's sometimes pushing in the other direction. Or if you think of the beach, when the waves are coming in, there's also some water coming back, and they kind of crash, but the water still tends to come in. That would be a retracement if you think about it. The main trend is the water coming into the shore, and the retracement is that water going back out, and then it continues to come in overall. So you get those little stoppages, those little bumps along the way. That's another way of finding a trade. A breakout trade simply means you were stuck in a particular area, and then it found a way. A good way of thinking about a breakout trade, if you ever look at the way water, after it rains or during a rainstorm, the way water runs, and if it hits a barrier of some kind, it kind of like accumulates there until it goes around it in some form. And when it does that, it's breaking out, and then it goes another distance. That's the idea of a breakout trade. If you think more like a rectangle and breaking outside of that rectangle. So the price kind of stalls out for a while, then keeps moving again. A lot of times a retracement trade starts out by forming some kind of a stops at a certain place for a while. That causes these rectangles and then keeps going. Either continues in the direction it was going, or it actually retraces and goes the other way. Then there's news trades, where you could have a view on the market, and you could choose to express it by putting on your trade right before a news event, and that way you'll get an immediate jump if your view is correct, or the other side would be you're immediately in the hole if your view is wrong. But depending on your view is and how you formed it, if you're basing it on fundamentals, well, then a news event will generally be good for a currency if you think that in general that the news or the fundamentals about that currency are good. A lot of it, you may get the idea that a lot of it has to do with not only your view of the trade, but your view of the whole process of what you're doing. This is a lot about how you look for a trade. Like, what is it you're looking for? What are you trying to do? See, a lot of us don't want to go ever to that step. What we want is, tell me what to do. Tell me when to do it. Don't make it too complicated for me. And I think the complicated is what makes it good. And since most people don't want to go there, they get stuck in that mediocrity of a winning trade, a losing trade, 2 losing trades, 2 winning trades. And it's in that little fine line between generally every week getting that 5th trade. So let's say Monday and Tuesday you get it right, and Tuesday and Wednesday you get it wrong. So your result for the whole week comes down to Friday. And the difference between success and failure a lot of times is if you get it consistently right that 5th day, on average out of the 5 days, getting it right 3 and getting it wrong 2. That's the difference between success and failure from the way I see it, as opposed to, I want to get it right every single day, so I'm going to always have these good trailing stops, and, I have a way of never have a losing trade. That's what happens when you're a doctor. When you're an IT guy or you're an accountant, you kind of feel that's possible in your business, so it should be possible in trading. Unfortunately, it's not. Now, in terms of tools and systems, these are all things that I'll be teaching you in this program. And I'll teach you a start-a-day system, teach you how to put a trade on right at the beginning of the day. Jimmy's bands, I'll teach you a system 24 hours a day. You'll be on the lookout for buy trades and sell trades. And in the general 24 hours, you normally get about 4 different signals, 3 or 4 different signals on average, sometimes 2, sometimes 1, sometimes none. But a lot of times you get several chances in the same day to express your view. Of course, if you are getting several chances in the same day, that's kind of suspect too, because if you're really right about the view, well, then it should give 1 signal, and that should be it for a large portion of the day. And so you'll see that as we go along. I review Jimmy's band trades every single day in Trade Finder. There's really no reason not to get really good at Jimmy's bands. Highs and lows. These are important. A lot of people, I think what they look at is they go back too far. They start going back months and looking at highs and lows from way, way back. And then they're doing a trade where they have a stop and a profit that's going to get wiped out, or they're either going to make or lose today, and they're looking at what happened 3 months ago. I think they're just way on the wrong field for that. I think you would look at highs and lows from the last day or 2. That's relevant. When you start looking back months, I think you're on the wrong track. So we'll talk about highs and lows, but very, very close by. European breakout system looks at highs and lows, for example, during Asia, and we use those levels to trade during Europe. That close by. And again, it's also a bit of a breakout rectangle kind of deal, as you'll see as we go along. 78.6 retracements. Basically, we're saying if something's going up and it comes back down 4/5 of the way, we're wrong if it goes 5/5 of the way. That means it's no longer a retracement. It's more than, you can only retrace 100%. So if we wait for an 80% retracement, that last 20% is our maximum risk. And that could be a good level if you're thinking it may start going back the way it was going prior to retracing. We like the 78.6. In particular, we like it with a Jimmy's band system. We're going to go over all this in session 2, 3, and 4. Candlestick patterns, that's session number 4. Teach you a nice daily system for the candle patterns. Bar reversals, kind of not really a trading system, but a trading tool. We'll be going over them. Room to go is the volatility measurement that I like to use. I really like room to go. It's a one day at a time type of a deal. And again, days like today, or Sunday, Mondays, can be dodgy because of the impact of news, and it's no exception with this past Sunday. So, but it's okay because we know it in advance, and we talk about it in advance. And the only reason you wouldn't know that is if you're not listening to your trade finder. And then finally, news trades. News trades can be a little frustrating. You don't get that many in a typical month, and sometimes they're hard to do. Other times they're great. I think last month we had an Australian a trade in the Aussie currency related to their interest rate announcements. Let's just jump in and put the trade on before the news, and we got it right. And it was actually in the direction it was trending anyway. And it was a very nice trade, and that you don't get. Unfortunately, it's what some of you are looking for is you want 1 or 2 of them every day. Ideally, you want one during that 45 minutes a day or half hour a day that you watch the market. See, that I can't do for you. I can only pull rabbits out of hats. I can't pull buildings out of hats. that I can't do. So there are limitations. Now, the London morning, 7 a.m., this is a key time of day as well. We had the European breakout session 2, room to go session 2, Jimmy's band session 3, and all the stuff we just talked about with the 10 p.m. London time. All of that is relevant in addition, in particular, to these two. These are particularly good during the London morning. It is my favorite time to trade, and we usually we do start at 7 a.m. London time. Now by 9:30 a.m. London time, we get the London news events, and these here can change the direction of the pound, and to some extent the euro, and to some extent the Swiss franc. The Swiss because it's loosely tied to the euro, and the euro because 70% of the UK exports go to Europe, and when traders want to have trades on outside of the euro, they put those trades on in pounds and Swiss francs because they're not members of the euro, but they're solidly part of Europe. So when you get good news for the pound, there are times where if traders are loaded up with positions in the pound versus the euro, which you would know by reading and by looking at the comments, a lot of times the focus. If you've ever read, you probably haven't, but if you ever read, like I read the newsletters of one of the major UK banks. Being an ex-trader helps. I get kind of some. I wouldn't call it. This information is available to their clients, but you have to be a hedge fund or a big client to get it. I get it for free. It's for free for certain people. I get it because I have friends that work at the banks. And, they talk in terms of the pound against the dollar, but equally against the euro. They always have an opinion of what the pound's going to do versus the euro. So lately they've been talking a lot about, we think the pound's going to go up against the dollar, but we think it's going to go up more than that against the euro. So what they're really saying is they think pound dollar's going up and euro dollar's going down, in effect. Now, that last statement was too much for you. I apologize. I keep forgetting. This is supposed to be the first session. I just look at the audience here, and I know a lot of you are not beginners. I shouldn't be looking at the Q&A thing. I should put that down. All right, let me continue on here. So, the upcoming, and as far as the news goes, you know, what can you do? Let's say you put a trade on at 7 a.m. because 7:30 a.m., European breakout trade, let's call it, whatever that is. We'll learn that tomorrow. And you're doing okay on the trade, but now there's news coming up. It's now 25 minutes past 9. Well, you can close that trade before the news. If you didn't have a trade on, you can think about opening a trade before the news. You can put a trade on after you see the news because you have a feel for where it's going to go. That would be session 5 when we learn to trade the news. Or if you think that the news has been totally digested into the price and now it's going to turn around and head back the other way, you can think about putting a trade on well after the news. There's a lot we can do. It's just none of it is guaranteed. You know, some of us, I think, are looking for that guaranteed thing, which just doesn't exist. Now, that's at 9:30. Now, 11 a.m. London time, we have what's called the exchange rate fixing. And again, some of you are looking for that, you know, nice, simple, easy, all I got to do type of approach. And okay, at 11 o'clock, because they have these fixings, it's possible. And actually there was some stuff about it happening on Friday afternoon, on month end on Friday, for the last Friday of the month, that there's been some funky price action in late afternoon New York, and it was related to what's called fixings, or exact rates that certain clients get. You know, clients sometimes want to know, I want to rate at a certain exact time so I know I'm getting a fair rate. And it kind of works against them because if the markets are very quiet, the markets can get manipulated a little bit for a few minutes. Now, I know some of you conspiracy theories out there are thinking that the whole market's manipulated and everybody knows where it's going to go but you. It is possible under certain conditions the market can be moved around by 30 or 40, 50 points for 2 minutes or 5 minutes or 10 minutes, something like that. But a lot of times when that kind of activity is even attempted, it fails as well. I know that firsthand because I've done it many, many times in the bank. And it fails as many times as it worked. It almost isn't worth doing. So try and forget about all that bullshit about, you know, people manipulating markets, and try to just focus on you learning what you can learn, what you can work with, and you can make a reasonable profit, you know. The reason you think everything's manipulated and everything is so bad and it's not possible to make a profit is because what's not possible, frankly, is making that 5,000% that you're after, or that 500%, or that 1,000%. And believe me, I'm not pulling these numbers out my ass. When I tell you you're trying to make 1,000% profit, don't take my word for it. Simply take your account balance and how much per day you're trying to make by your own mental process and multiply that daily number by 250 days. Divide that number into your opening balance and you'll see you're trying to make 1,000% or 5,000% or 500% on your money, and that's not what's not achievable. Great hedge funds make 10, 20, 30, 40, 50%, and even on a good year, a good average number would be like a 20% gain for the year. Think about 20% in relation to 5,000. 20% is achievable. 5,000 is where your problem lies. For most of you, your problem isn't making money. It's that you're not making as much money as you're trying to make because you have a misconstrued view of what's possible. That's the problem. And, you know, there are ways, and we've talked about it, you can get to the point where you manage money, and there are ways of making good money at this, but you actually either have to have a lot of money to make a lot of money, or you have to have a lot of skill to make a lot of money. Preferably, you need all the skill, no matter how much money you have. Without the skill, you'll just lose a lot of money. But if you have the skill, there are ways. It just ain't going to be convenient enough for many of you because it's going to actually require some effort on your part. But believe me, there's plenty of money out there looking to invest in anything or anybody that can make them 20%. That's the going number these days because interest rates absolutely suck. And although they've gotten better, they're probably going to soon top out if they haven't already. Moving on here, so at 11 o'clock in the morning, what you're going to be looking out for is directional changes, not in every currency pair, but maybe one currency or one currency pair looks like it's out of line with all the others. And if that movement started occurring probably between 10:30 and 11, it could even be longer, but if it's out of line with all the others, you may want to be looking at that one and thinking, if it starts to go back in the direction of all the others, it may continue till it gets to that level, maybe even further. So it may have been temporarily moved out of line with the others for a reason, for an agenda. But try not to overdo it with the conspiracy theories. Some of you get very carried away, frankly. Another one is the option expiration. This is very real. I've done this and been involved in this many, many times in the banks. 3 p.m. London time, that'd be 10 a.m. U.S. time. We have a daily option expiration, and these are not the ones listed on any any exchange of any kind. These are over the counter, meaning it's just straight bets made between banks and hedge funds and pension funds and all, and it's derivatives. It's the idea of they bet on things other than actually buying and selling the currencies. They just bet on the direction. Some of these bets are absolutely astronomical because of the way the markets have degenerated. You may or may not know that all the problems of 2007, 2008, which kind of crippled the world, had to do primarily with derivatives. Had to do with creating these contracts that are just pretty wacky stuff. It's best I can give you. It's pretty wacky stuff. Bottom line is, at this time of day, at 10 o'clock Eastern, 3 p.m. London, it's very possible a situation even more so than 11 o'clock a.m. London time could be in place where it's to the benefit of one particular entity, whether it's a bank or hedge fund, etc., to hold down a particular currency pair or hold up a particular currency pair, and then let it go. Now, remember, we're talking about some of the smartest, most cagey traders in the world doing this, and they're doing it for millions and billions of dollars. So it's not going to be as simple as, okay, it's 10:01, let's unload that position. It's just not going to be that simple, But you do want to be aware that there actually are hedge funds out there that all they do is look for price deviations around this time of day. And that's what they do the whole hedge fund based on, and they're very successful. So it is important, and it's just not the kind of thing that it's not as simple as getting a green arrow or a red arrow on your chart. But you should be aware of it. All right, finally we got near the end of the day, European closing. And what's happening here, 4 p.m. London is 5 p.m. over in Frankfurt, say. Traders are going home. The London traders, the European traders are going home. A lot of times on a day where the market's been moving primarily in one direction, or one particular pair's been moving in the same direction, there probably were a lot of bets that pair wouldn't go quite as far as it went. And if it doesn't turn around, well, then they all need to get out. So a lot of times you see that last movement in that direction right around between 4 and 4:30 p.m. London time. That would be between 11:30 in the morning U.S. time. A lot of times the the market changes directions in a particular pair, or the dollar in general, or euro or pound. A lot of times it has to do with, coincidentally, traders just all having the wrong positions and all deciding at once they got it wrong. So that's another time you want to keep in mind. Okay, last slide here. During the evening in London, from 8 p.m. all the way to 6 the next morning, there are a bunch of news events. Australia has them, New Zealand has them. And they're, these are market moving events. Same thing, you can get in before, during, after, close your trades before. Usually they have to do with the Aussie and New Zealand against different currencies. So, there's a couple of news events related to China that have a direct impact on the Aussie as well. So these are some of the things we can look at. We really learn this by doing Trade Finder, live trading. This is really how I teach. The idea is with Trade Finder, 260 trading lessons a year. It's another way of looking at it, as opposed to the hot tip sheet for tomorrow. And live trading, same thing. Rather than think of it as a hot tip on the market today, think about it as a way of getting inside my head on a live basis for approximately 75 minutes. That's another way of looking at it. So, as I said, I finished a little early, which I have, 5 after 5. So I'm going to give you guys a chance. I'm going to go refill my coffee, give you guys a chance to type in some questions. Put them in the Q&A section so I can see them. And hopefully this Q&A section is working so I can see your questions. So go ahead and type them in. I'll give you a 2-minute break. Okay, so we got a little, I see we got some questions here. What do we got? Just one. Wow, that's good. What would be a reasonable monthly return? I would say a reasonable monthly return. Well, I can tell you what the people I talk to say. They try to make 1 or 2% a month. That's what they try to make. Because 1 or 2% a month would be 12 to 24% a year. Of course, their real goal would be, if possible, to make more like 4% a month on average, because then they'd make 50% a year, which would be awesome. But 1 to 2% is what to shoot for. I don't think you want to think in terms of your own account. So when you're thinking in terms of your own account, where are you going with that? In terms of your own account, if your account's 5,000, you can't think in terms of, well, I want to make, 2,500 a month because that's how much I need to pay my bills. Because then you're looking to make 50% a month, and one investment makes 50% a month. So I would say 1 to 2% a month. Yeah, you can have a healthy aim, but again, when you're trying for too much, what happens is you're looking and you're like, well, I ain't making that much this month, I better do a trade. And then you start doing trades you shouldn't be doing, or you're betting too much, you have 1 or 2 losing trades and it cripples your account. You see, under those conditions, what's going to happen at some point in your career, you're going to have 10 losing trades in a row. And you got to make sure when that happens, it doesn't wipe you out. It could hurt you, but it shouldn't, maybe it reduce your account by 10 or 20%, having 10 losers in a row, but it shouldn't wipe you out. Done it already. Yeah, I believe it, I've done it myself, sometimes I get a little carried away myself in both directions. Yeah, you have to be very careful, and you got to make sure you're definitely at a point where you totally know what you're doing before you get involved. Sorry, it looks like it's just me today. Yeah, you seem to be the only one with any questions today, which is fine because looking at the group here, I actually looking at the group here, I can see a lot of these names are not beginners, so they already know what's cooking. So, all right, no worries. We'll just call it a day. If you have any, if you guys come up with any other questions or anything, you can send me an email this evening. I'll take a look at it, or you can always ask me tomorrow. That's fine. You're welcome, Arvin. Good to see you, my man. We do have tomorrow. We have live training session number 2, and in session number 2, we're going to be doing European breakout and room to go. So tomorrow's going to be all business, so to speak. It's just going to be talking about exactly how to do the European breakout system. We'll go through it. We'll take out the live